In today's video, we're diving deep into a topic that affects a lot of us, and that is the cost of renting. What's up, guys? My name is McKeown, and I'm a licensed real estate agent in the Dallas-Fort Worth area, as well as the Orlando, Florida market. But before we get into today's video, if you guys are finding the content on this channel useful, please give us a like, subscribe, and turn on the notifications to always be notified when I release another video. If you're renting your home, do you feel like your rent is just too much to handle? You're not alone if you said yes. A study actually from Harvard has thrown a spotlight on just how shocking renting is for the US. For half of the renters actually in the United States, rent takes up way too much of their paycheck. According to them, rent is considered too high if it's in the 30% or more of your monthly income. It's definitely worth it to take a moment and see how your rent stacks up against your earnings to find out if you're in what's called the danger zone. So let's talk numbers. About 45 million families across the US rent their homes. That's like 1 out of every 3 families. The Harvard study actually discovered that of these, 22 million families are drowning in rent. That's just too expensive, setting a new record high. What this means, though, is finding a place to live that doesn't break the bank is more challenging than ever before, especially for those earning less. The study actually points out that there are nearly 50% of all renters are burdened by the cost of their rent. But here's where it gets really tough. For folks making less than $115,000 annually, a staggering 85% are struggling with rent. That's too high. Now, these statistics are alarming and clearly show that the less money you make, the harder it is to afford your rent. However, moving on to some potentially good news is rent prices might actually start to decrease this year in 2024. But before we get into that, let's understand the reasons behind the sky-high rent prices that we're seeing. Over the past few years, rent has gone up a staggering 30% compared to the period before the pandemic hit. Now, a few reasons for this include the rising cost of pretty much everything, or inflation, wages not really keeping up with the increasing costs, and more people renting because buying a home has become incredibly expensive, a shortage of rental properties, and a rise in people wanting to live by themselves. All these factors boil down to a classic supply and demand issue. Simply put, there are more people looking for homes than there are homes available. Now, this is just some personal experience on my behalf, owning a handful of rental properties. The short-term rental market has done very, very well as of late. I think mostly when it comes to a short-term rental market, if people have the funds and the means, they're gonna pay whatever it means to essentially go on that destination. But when we're talking long-term rentals, I've got one that actually just came back up for rent in January, and now we're sitting in February, and it still hasn't leased. And the current lease amount is technically lower than what it just rented for the previous 12 months. So whatever I wind up leasing it for here, and it's a property in Florida, I'm actually gonna be getting less cash flow than I got the previous 12 months because the rental market is coming back down. But here's the hopeful part. More rental properties are being built, which should essentially help ease the high rent prices a bit. However, don't start celebrating just yet. There are a couple of reasons why this relief might technically only be temporary. First off, the number of new construction projects for rental properties is expected to drop by 20% next year. Plus, even with all of these new units, we're still in the middle of a severe housing shortage. So while these new homes may definitely help, we're still going to be far from solving the problem. Now, things might improve slightly, but we're still not going to be going from a dire situation to a fantastic one overnight. The cost of building materials, labor, and land all are on the rise, not to mention the increasing interest rates, which are all contributing to the problem. Now, we can obviously hope for those lovely rate cuts that are expected to come in 2024, but with the, I guess, good but bad job reports market in January, it's kind of weird how the economy works here, or just how everything works. You don't want a lot of new jobs because then the economy is not as good as we had hoped. And when the economy is not as good as we hoped, then the rates will go down. It's confusing, but needless to say, we're all hoping for interest rates to come down this year and expecting them to, but as of the first month and a half or two, they've only gone up. Now, here's a little bit of advice. So if you can manage it, try to time your rental search during the winter months. You could actually end up saving about 3 to maybe 10% of your total rent. And in some places, the savings could be even more significant than 10%. It's not an option for everyone, but it's definitely something to consider if you have flexibility. The main reason here is because I think we could all agree we don't want to really be moving during the holidays. That's Thanksgiving, New Year, Christmas, so on and so forth. Most people will choose not to move during that time, so anything that is currently available, maybe in that November, December, or first of the year timeline, you could potentially get a better deal on. And lastly, while there might be a general trend of decreasing rent across the nation, the situation can vary greatly depending on where you particularly live. Some cities might still see an increase in rent, while others could certainly see a significant decrease. Always keep an eye on your local market trends in your area, because that's obviously going to fully dictate where your rental market is. Now, just utilizing the Dallas-Fort Worth market, which is my main market here in Texas, I can tell you, because I just leased out to myself, I put up a rental in the Arlington area for a pretty affordable amount, and I got multiple applications and tons of interested tenants, even though we're in the month of February, a kind of slower season. But because of the monthly rent being so affordable relative to the other homes in the neighborhood, it rented pretty quick. Now, on the other side of the spectrum, my house in Florida, initially, as I mentioned before, it leased out for $2,700 the last 12 months. So I relisted it this year knowing the market was gonna be a little bit softer for about $26.95. Well, it still hasn't leased for $26.95, so I lowered it to $25.95, and it's been sitting at $25.95. Now, I know obviously as the spring market comes, there's gonna be a lot more people having the option to move or lease this. The question is do I just continue to lower it pretty aggressively and get someone in there as soon as possible to offset the vacancy? Or do I just kind of let it sit vacant, lose out on that daily rent that I would be collecting from a lower price tenant with the hopes of getting that higher price down the road? I personally am fine renting it a little bit or a decent amount less than last year if it means it's gonna be sitting less, but I'm kind of in that gray area right now of finding that number that still makes sense versus just having it continue to sit. I think at the end of the day, the rental market is definitely similar to the real estate purchase or sale market. Obviously, we all know over the course of 2020, 2021, and 2022, prices went up substantially when it comes to just purchasing a house. Obviously, if you are a landlord such as myself and the property value goes up, that means your taxes and likely your insurance goes up. Well, if my taxes and insurance goes up, well, that means my rent has to go up. Otherwise, I'm either making less money or I'm losing money at the end of the day. So yes, over the course of the last 3 or 4 years, I've had to jack up my rent, and it's probably gonna fall a little bit moving forward into 2024. However, as I mentioned earlier, if rates do come down as they're expected to, well, that means all of these individuals that have been renting and have been holding off on purchasing a home because they essentially can't afford to do so, it's gonna flush a lot of people into the purchase market, and it's also going to bring out a lot of investors that haven't been purchasing because investing doesn't make sense at 8, 9, or 10%, and it's gonna cause the rental market to likely go back up again just as it did during 2020 and 2021. Now, a quick and easy way around the total cost of renting is something that I say pretty religiously on this channel, and it's just purchase a house. Now, when it comes to purchasing a house, make sure that you can afford that house and make sure that house is going to be something that you hold long-term. For instance, if you're a single individual and you can already assess that in maybe 2 years you're gonna be married with a kid on the way, maybe buying a 1-bedroom condo is not the most ideal option for you, right? But if you are an individual that's married, 2 kids, and you're not having any more kids, a 3 or 4 bedroom house in the suburbs is something that could be suitable for you for the many years to come. So if you purchase a house, you're not gonna be putting any money more in a landlord's pocket. You're gonna be putting more money towards principal and pay down on your particular house and actually build some potential wealth for yourself. Now, obviously, it's going to be a case-by-case situation based on where you and your significant other or your family is at, or just you alone. But at the end of the day, you've got to make the decision whether or not renting versus owning makes sense. But the big picture should always be trying to get into a situation where buying makes sense, because rent, like a lot of people say, is 100% interest at the end of the day. Thanks again for watching, guys. Make sure to like and subscribe. It really does help, and stay tuned for the next video.